we're live. Kevin, good morning. Or I
Yeah.
guess good afternoon for you.
Good morning to you. How you doing?
I'm great, man. I'm in the GGV Truckee office, trying to squeeze in a few days up here with my kids before the summer's over. Believe it or not, it's we only have about 5 more weeks of summer, so we're trying to get a few days in.
Yeah,
But I'm excited to talk to you, and I assume you're at home.
I am at home. We had for our summer plans. We have the blow up pool outside blown up. It's like the 8 foot by 10 foot. We have our 11-month-old that crawls in like that much water. So that's like my beach this summer, which is fantastic.
I know that feeling. I've had 4 of those.
Yep.
Well, let's jump in, man. I think it'd be helpful just to give, I always love these because it helps to give people a little bit of perspective. A lot of times folks read about the successful fundings and, all the great news about the company along the way, but they don't really get to know you as a person and know your journey. And so I'd love it if you could just share a little bit of your background, sort of what led to this window in time where you decided to start Fairmarkit, and then we'll jump into some other stuff.
Yeah. So I'll start went to UMass Amherst. I always have to give the shout out to UMass. Was in finance to start. Was working for a big tech company, an intern there. And then right out of college, did sales for the tech company. I actually saw the problem that we were trying to solve for Fairmarkit originally at that first company, which was essentially in the enterprise tech space. No two companies had any idea what the other one paid for the same hardware, software, service. Because I was a 23-year-old kid negotiating 300, 400K deals where we could sell to one company for 250K, the company right next to it for 150K. It just didn't make any sense. It was a black box. So I did that for about 3 or 4 years. Then I joined a mid-sized tech company where I took on a sales leadership role. And then, like everyone, I think that starts a company, you kind of have that like 3 or 4 month like tipping point where it's like, do I do it? Do I do it? You're kind of out on the branch. And then got confirmation from my wife that it was good to quit my job and not get paid for about a year. And I just took the jump in. I said, let's just go for it. Because my thought was I can always go back to another tech sales job. But this was what I believe was the right time in my career to take that like leap of faith and to take that risk on. So we started off, and the original plan was to build like a Kelley Blue Book or a TrueCar for IT software pricing. So I started up with 2 other co-founders, Tarek and Victor. And our whole premise to start wasn't, let's go build this product and then see if customers can get there. It's let's just go cold call 200, 300 people a day, get in front of executives at large companies, pitch them the ideas, like a Shark Tank-esque pitch right off the bat. And then we realized very quickly we had to be more curious and listen and kind of learn what was important to them. So very quickly, we kind of understood that what we were trying to solve was a problem. It maybe was not one that we should be addressing right now. But during those conversations, that first 3 or 4 months, we really kind of started to listen and hear this other problem, which was this whole area of procurement that wasn't being addressed. So we took a step back and we said, why isn't the procurement space have more innovation? And it was wild to us. It's an incredibly archaic market. Companies spend $8.2 trillion a year, and the incumbents locked themselves in the 80s and 90s and then really haven't been pushed to innovate. So what we said was, you know what? We can start with a Trojan horse approach where we're not trying to rip and replace, but we can go in and we can tie in with these big systems, use machine learning to automate how companies buy goods and services, and then over time, show the business value around lower costs, faster turnaround, de-risking, helping supplier diversity and sustainability goals. So over time, earn the right to expand up and out. So that was like an abbreviated story, but that's kind of been the journey to this point. There's been plenty of mistakes, twists and turns, like challenges along the way, but
I'm going to get to that.
40,000 for
you. Yeah. Did you grow up in a family of entrepreneurs, or what, a lot of folks are 23, 24, 25-year-old sales reps and see these problems, but don't ever make that leap to actually start a company. What do you think was in your background or your DNA that inspired you to do? Because it's hard, right? Like, I mean, that idea of, I lived through that where I told my wife, hey, I'm going to take no salary for a year and I think we put like $30,000 or $40,000 of our own money into this company. And she's like, So what inspired you to do that?
And that conversation happened over nachos because my wife loves nachos. So I was like, hey, I want to have some of these. I grew up in a big family and my dad was always a workhorse, just like absolute, like in sales, like grind it out, still works right now. And he always kind of pushed me to, in a good way, of like, keep trying to get higher in terms of like, keep pushing the bar, keep trying to challenge yourself. And it was very much, it kind of was part of the culture when I first started my career of like, get comfortable being uncomfortable. And I really love that mentality of just like, if you're uncomfortable, that means that you're growing. And I felt like in each of my roles, as I get comfortable, I figure out what could get me uncomfortable. And I still do that today. One of the tipping points that really said like, all right, I'm going to do this with the co-founders as well, was in the first like week where I finally made the decision, I'm going to give it a go. And my dad, it made a small investment, but he doesn't make angel investments, but made a small investment in the company, which was meaningful at the time. And that to me was when I flipped the switch. And I love the mentality of just burning the boats. And you need everyone.
Right. And then you're like, I better not lose that money.
My brother-in-law kind of invested in. So that's when I literally, it's like the saying, you travel over, you burn the boats, no going back. So like that was the tipping point. And I was like, this has to be successful. So then that's kind of been the drive since.
And how did you come together with Victor and Tarek? Because I think, that's a key part of the story also, right? It wasn't just you, it was a team of people working on these problems. How did you guys come together?
Yeah, so Tarek and I actually worked together at our last company. He also kind of had that itch of like trying to do something bigger and just loved the idea of attacking challenges. He's also a D1 wrestler, so we'll run through a wall for pretty much anything. So that was the initial team. And then about a month in, we realized that we did need a technical co-founder. And because like it was very quick, and we realized that you can't just like go out and like sell it. You have to be able to build something, especially early on. So we interviewed about 30 different CTOs. We happened to find Victor. He had a background that aligned with what we were looking for, but more so, he just had that founder mentality where he just wanted to solve problems. He wasn't looking for, hey, go build this. He's saying, how can we solve this differently? How can we challenge customers? How can we really have a seat at the table and work with them on it? And it just ended up clicking, where we're all super different. We all disagree all the time, but we all respect each other and we always keep it positive, which is what I think has allowed us to get to this point.
So you guys decide to start the business. What happens in the first year? Tell us some of the, good and the bad of what happened, raising capital, landing customers. What happened in that first year?
Yeah. So the first year was, and I don't know if you know this part of it, Jeff. So in the first year, when we were trying to sell this price transparency, we actually got 5 customers to sign up on $50 a month licenses. So we got like Best Buy, Welch's. We got big companies to pay us $50 a month, which was nuts because they were given to us on a credit card on Stripe. Yeah. And we celebrated as if it was $1 million deal. And like, yeah.
I love it. I love it.
And we, so we got about 5 deals. We had $250 of MRR. And we went out to go to raise money. And obviously like that, like from that perspective, we were always started trying to think like, oh, let's raise from the top funds, let's get in front of them. And we quickly realized, like, as we were going through this, we were staying curious that like, this would be a hard business model to scale, because especially if we're charging this amount of money, and it was tough to quantify the value. So as we were kind of going through this process first 3 or 4 months, that's when we really identified the challenge of procurement. And we started to work with our first customer on just like an MVP and understanding what's the business value. We worked backwards from there, and we kept iterating with them every single month. And then after 5 or 6 months, we actually got our first like true contract for our platform that we sell right now. It was 120K ARR. So a meaningful contract is your very first one. And so we had two sides of the business running, which they say don't do because like you can't like boil the ocean. But on one side, we had 5 customers paying us a very little amount, tough to measure. On this side of the house, we didn't even know the procurement space. They were paying us 120K, but they were saving over 120K a month. We took the time it took to do their work from 40 minutes to under a minute, and they had all the data in one place. So they saw a ton of value. So even though we didn't have a ton of like data on this side of the market and this platform, we just, after 2 or 3 months of a heavy debate, we made the decision there's too much business value here not to really explore it. So we pivoted. And then once we pivoted, that kind of wrote the story for like getting other customers on it, and then going out to raise the seed, which was an absolute slugfest.
Talk about that.
Yeah, so we did what everyone said not to do, which is we went with one major customer to every top tier VC and said, we're ready to go. Can we raise 2 or 3 million? Everyone said, like, come back when you have $1 million ARR. So in 20 customers. So we did that. We got a lot of like soft no's, which essentially passes. And then we went to the angel groups, and because we went all the way down, and we literally just like put our heart on our sleeve and just like went out in front of big groups. We picked up a couple angels. But then we actually had a term sheet from one of them that ended up falling through early on. And that was like a pivotal moment where we realized like we thought we had the term sheet, we thought we were going to raise, we thought we had the capital committed. And then one night on a call, it essentially evaporated at like 10 o'clock.
This is from an angel investor.
It was from a group. Okay. that had committed to doing a big portion of the round.
And what caused them to back away?
They didn't have the interest that they thought they did when they went to actually go around to get the different angels to contribute. So for us, it's like we had a ton of cash in the bank at that time. And for us, it was kind of one of those pivotal moments where I was like, all right, like we can either say like, oh, like we tried, that didn't work out. Or what we decided to do instead is we just took what we knew, which was selling. And we just went out and we just targeted, which we should have done earlier, all the seed level VCs. So that's where we went out and we really started to talk to people that wrote that like $200K to $500K to $1 million checks. And we ended up actually writing our own term sheet, then oversubscribing on the round within a couple of weeks. So I think like lesson learned, probably start with the VCs that are in your target range, as opposed to going above or below for where you're at.
Great advice. And I think also the reality that things can go sideways, right? I mean, I think that happens. It's not uncommon, not just with angels. It happens with seed funds and like shit goes wrong in fundraising. It is what it is. But you get back up and you live to fight another day. So you guys raised some seed capital. How much did you raise in seed?
We raised $700K.
Okay, and then what happens for the next 12 months?
Yeah, next 12 months, grit it out. So we raised the capital. We didn't. It was a lot of individual contributors, a lot of like individual heroics for like sales, CS. The big thing that we did from a tech perspective is we knew that one of the biggest areas that would deliver more value for our customers, but wasn't the most challenging, was build out integrations with all the bigger players. And it's something that we knew if we didn't have that foundation, we couldn't scale. So from a tech perspective, that was the biggest thing, is to build those integrations and to focus on the data science side, because those were like two of our differentiators in the space. So we did hire at that time and we grew. I wouldn't say like we really put the pedal down and said, let's like grow at all costs, because we were still very much learning as we went. We'd had some customers that use it a ton, the platform, some customers that like wouldn't use it all. Like it was just a mixed bag still of refining our ICP, refining like how we want to sell it. We changed our pricing model like 5 times. We changed offices like 3 or 4 times. We were above a bar for a while. So essentially,
which is fair to say though, that, I mean, you've mentioned pivot, change, like these kind of shifts in the business and learning and iterating. I think common misperception is people start a company and goes up into the right. And every founder that I work with has had this journey that you've had of you sell, you iterate, you raise, you iterate. Like that is the process of building a company.
It's also fully agree. And it's what makes it fun. And it's what we say to the company all the time, especially in this phase of our growth, which is if things aren't breaking, then we're not growing fast enough. And if people don't like to have that atmosphere where things are changing all the time, then there's 18,000 other jobs or more that are better for them than Fairmarkit. But if you have that position, you attract people that just love that, because they're people that's how you grow. And as the company keeps scaling, the big thing that we're working on now is making sure that we develop the current people at the company. So we help them like accelerate their careers, like develop personally, professionally across the board. But then we also bring in leaders that have done it before, that have gone through this maturity curve, and then really creating that culture where they can really work together to optimize. So I feel like that's a big piece of it.
And so you guys end up raising a Series A with Insight.
Yep.
Terrific firm. I should note that you and I also met during that process, right? We met you kind of late in the Series A process. And I remember we met you, and Tiffany and I were really excited, and, you know, but we were late, and Insight ended up leading that round. Talk a little bit about what happens then. You raise some, you know, a solid amount of capital from a great firm. What then happens both from a company standpoint and also for you as a founder and a CEO? What changes did you have to make in the way you were thinking about your role?
Yeah. So from a company perspective, it was really thinking about like what the 6 to 12 months is going to be out. So like understanding who we have to hire to grow for the plans that we have now that we had raised the capital. We raised 11 million with Insight. It was also making sure that we had the right people to position us for the round that we did with you, which is position us for that growth where the expectations get higher in a good way, but you need people that are dragging you through it versus you kind of dragging the team through it. So I'd say from a company perspective, we just kind of up-leveled and it got more, we just grew up as a business from a maturity perspective, from a process. We still haven't perfected it. We're working on it right now, but it needed to be less, okay, this one salesperson is going out and they're doing some crazy thing to get the deal. More of, okay, what's our process? Like, how do we make sure that we're really tracking all the data points from a pipeline perspective, from how is our conversion ratio? How long is time to onboarding? What's time to value? Like what are the steps on the customer journey to get to the point where they can be an evangelist and a reference customer? How do we now make our tech team, where it's not this like big core team, but we have in smaller project teams and we're doing quicker sprints to be agile? And then how do you manage new requests coming in versus the roadmap, a lot of those aspects?
One thing that you are exceptional at, and I think way ahead of most founders, is thinking way out. For example, you and I, shortly after we did the Series B, started talking about what do we need to do to raise a Series C. Just last week, I think it was, or maybe it was the week before, you and I were talking about what does the go-to-market team need to look like in Q2 2022, a year from now. And I think it's one of the things that is a real challenge as a founder and CEO, because you're putting out fires, you're dealing with a lot of shit every day. It's hard to think that far out. How do you do that, and where did you learn that skill set? Because I think it's a super valuable thing that you do, and some of our other really exceptional founders do, but it's hard. Where did you learn that, and how do you do it?
Yeah, so I'd say I can still get better at it, first of all, because this is not like problem solved.
Of course.
Yeah. I mean, one of the things I love to do is pull data from a lot of different sources. So I pull from you, from Lou Shipley, from like Thomas, from our different like C-level VCs, from other founders, and really just understand how are they thinking about the role of a CEO? How are they thinking about scaling the business? Get all the data points, then try to make the best decision for Fairmarkit. So that's one piece of it, is like, I haven't done it before, so I'm not pretending like I have. Like, I am beyond open to feedback, whether it's constructive, like no matter what type, because it's all data points that we can then use to make decisions. The other big thing that we've realized, like, it has been just bringing in the right people or enabling the right people to run and to carry the ball. Because if you bring in different leaders, it doesn't have to be someone that's done it before. Yeah, that's ideal for some situations, but it could be someone that's an up and comer, huge ceiling, that when you empower them to go run, it then allows you to take a step back. And because I'm going to get pulled in where help is needed. I'm going to get pulled in when we need to make a strategic decision. And then that way you can take a step back and say, okay, what are truly our growth plans? What are we looking to do as a company? And unless you're trying to sell in a year and a half, which I think is a crazy mindset to ever have, because then you're making bad short-term decisions because you're hoping for an exit and you burn everyone out. But if you really have that big picture view of this is our market, this is where we're looking to get to, here's going to be our competitors or challenges along the way, then you can start to plan out what are we going to need in the future, and who can we start to pull in now that knows that movie, has seen that story, and it's going to be preempting us to get around these hurdles a year down the road. So
yeah, you also brought on two independent board members early. A lot of our companies have these independent board seats and they sit empty for Series B, Series C, Series D. It's a little bit of a pet peeve of mine, because I think independent board members add a tremendous amount of value. Talk about how you did that, why you did that, and some of the value that those two folks have added, because I've seen it firsthand.
Yeah, so I did get the feedback from other people. Is our board to start was myself, Lou Shipley, who is a multi-time CEO in the tech world, and then Stephen Gregorio, multi-time CFO. So he's taken multiple companies public, multiple exits. And people kind of gave me the negative feedback where, okay, you're creating a board where they could fire you right away. Like, you just lost control. And for me, it was much less of that. And for me, it was, we're first-time founders. Like, I believe our team has a super high ceiling and be able to grow this company into a massive, like, industry-changing company. But we have to acknowledge that we are first-time founders and that we want that support. We want that help. And it really comes down, it's the same thing with me and you, Jeff, you and I. It comes down to trust, where it's, if you trust people that they're giving you feedback with the best intentions for the company, for the like you as founders, as a CEO, and they're truly genuinely giving you that feedback, then like that's invaluable, because those are people that have the complete picture, and then now they can be able to give you that feedback. So that's what I got for them early on, and also I really enjoy working with them, where I feel like if you're going to do something for 10, 15 years, whatever it is, like, have fun. Because if you're not having fun, then it's going to be a grind, and not in a positive way. And I think the rest of the company would feel that, as opposed to just like ball.
Talk about what was COVID like for you guys? When Q1, Q2 of last year, I think was an incredibly challenging time for most founder CEOs. John Chambers from Cisco has this sort of famous saying that every company has to go through a near death experience to to be great. And I think for a lot of Series A and B and C companies going through that experience, it wasn't always near death, but it was pretty challenging. And I think it will build stronger, more resilient companies as a result. What was it like for you as a leader?
So for me as a leader outside the company, it was the complete unknown. And it was like they always say, you got to be able to make decisions with very little data. That was very little data. Mm-hmm. Where it's like no one has any idea what's happening. So the main thing was just over communicate, be open and transparent. And mm-hmm. like no one can ever expect that we have all the answers, especially going through a situation like we did. So for us, it was just A, trying to do right by our employees to make sure that we put their health first. B, make sure we're doing right by our customers through this, because a lot of them felt this as well, especially in the procurement space. There's a lot of challenges that came up with COVID, whether it's supplier continuity, whether it's cost savings, whether it's having to let go of people. And for us, like as a company, what we did, as I think what most companies did, is we acknowledged the situation to the organization. And we just said, we're going to have like a very fluent, that's when we switched to two company meetings a week. We still do it. They're like over communicating.
Wow.
Okay. And then what we did right off the bat is we said, you know what, to ensure, we don't know how this is going to impact the company, like truthfully. So what we're going to do is we're going to be a little conservative with hiring that we have. And we did have to scale back some of the headcount because we want to make sure that we weren't in a situation where we didn't execute. We're in a worse cash position. Mm-hmm. So we did that, which I believe we did effectively because we were just open and kind of honest about it. But then once we started to realize that, you know what, from a culture perspective, we were able to make it work with Zoom. We were able to really kind of make sure people were bought in, we're on the same page. And then in our industry specifically, we actually saw a tailwind because these big companies were getting their digitalization transformation budgets approved because they need to find ways to get business value, quick time to value, but without adding headcount, which was a perfect fit for us. So then it was a question of how do we then use this to accelerate, which is why we raised the Series B, is because we saw a market opportunity. We started to have that traction. And I mean, it hasn't slowed. That being said, like there's still the uncertainty now of how do you go back to the office? Like what is our strategy around that? So I feel like it's a new set of challenges, but it's a game of whack-a-mole. There'll always be challenges we're working through.
So true. And I want to be conscious of time. We've got about 7 minutes left. Talk a little about where you want to go with the company and where you want to go as a leader. I think, you have a big vision for Fairmarkit. You mentioned the idea that we're not shooting for an early exit. Obviously, we wear our Go Long shirts with pride because that, we want that, right? We want you to build something that's going to be around for a very long time. But talk a little bit about that. What's your vision for the company? How do you communicate that with the team? And sort of where do you see this company going?
Yeah. So I use the exact same slide I use when we fundraise to the company. Every orientation class, like every time we talk about the strategy and the vision of the company, we just stay super consistent. Where as an organization, we're coming in underneath and kind of Trojan horse in the procurement space. We're proving our value. We're gaining market share. And then over time, we have these different battles to go. So we're going from the tail spend space into strategic sourcing, into the payment side, out to the end user. And then eventually what we're kind of rallying the company around is truthfully what we're doing is we're revolutionizing how companies buy and sell. And we're creating a very intelligent enterprise marketplace that allows people to do that. So for us, the mission that we have is it's to really disrupt the industry, but I feel like you need to have that David versus Goliath to get people fired up, especially when you get to 1,000 people or 10,000 people. So for us, we see a very, very big David versus Goliath going against Amazon eventually. We think that they are in the small, like tiny purchases space right now. It's called the tail of the tail, but it's a $1.7 trillion organization. They're going to come up market, which makes sense because the space is so big. So everything we're doing right now is figuring out like, how do we eventually position for that end battle, which like, if you can't get a company fired up about going against Amazon in 5 to 7 years, you should fire me right now because like, that's what we're all driving towards.
And how about you on your personal journey? Where do you see, where are you today as a CEO, and what do you think you need to learn or get better at in the next 12 to 18 months? And also maybe share some tips for other founders. Where do you go for advice and input? Do you have a coach? Do you have mentors? Do you have advisors? What's been most valuable for you as you've tried to scale or are trying to scale as a leader and a CEO?
Yeah, so I definitely have to keep up leveling. we're going to keep hiring people that are so good. It's like the saying, like, hire people that are so good they scare you. And like that's my whole goal. Is like hire people now you're like, this person is so good. So like that's one of the biggest things of the job right now, I believe. It's like, for me, the three things are setting the strategy and the vision, maintaining and enabling the culture, and then hiring great people. If we can do those three things, I think the rest falls in line. I need to get better from a development perspective at like taking a step back more and feeling comfortable doing that, because I still love being in the weeds. I still love getting in front of customers, which I'll never stop doing, but I still love kind of being in the mix. And it slows the business down, because then like if we can't push the decision making down to the lowest common denominator, then we're not going to be able to scale fast. So I as a leader, there's different types. I know I've read like multiple books on like, are you hands-on and in the trenches for everything? Or can you go take a trip for 2 weeks and just think and come back with ideas? I'm probably more leaning in the hands-on, but I'm trying to get more in the middle. So that's what I'm working on.
It's a challenge that everyone deals with, right? I mean, if you're a founder and a CEO, it's hard to be, every great leader you read about, Jeff Bezos or, Phil Knight, or, I mean, everybody, Howard Schultz, anybody that's ever built a great company walked that fine line, because you know the business, you want to be involved, and people want you to be involved. They feel your energy, they feel your passion, but you got to hire great people and let them run with it as well. I think that's a hard balance. What about who are you learning from? Who are you tapping for advice and input along the way?
Yeah, so I do use, I love the GGV group, the CEO cohort. That's super helpful. It's other companies that are similar stage to Fairmarkit, and we just bounce around ideas. I do a similar cohort with another group as well. I do talk to different founders around Boston. It could be founders, it could be CEOs, it could be CFOs. I do rely heavily on like our venture teams. So obviously we meet all the time. I meet with our other board members. I meet with our seed level VCs. A big piece that I really love to do is to like not go in and say, what do you want to talk about? Or go in with saying, let's try to solve everything. I try to bring very specific things and situations to people and say, let's dig into this one topic. I also have an executive coach, which I would recommend every founder CEO to get. We got it for our whole executive team. And then anyone that gets promoted to VP then gets an executive coach for the first 6 months.
Love that. That's amazing. It's
awesome. And it's legitimately, you do 360 review of everyone at the company. They give you feedback, and then you build a track around that. So it's it's just a great thing to hold me accountable to stopping and doing self-development versus just like 1,000 miles per hour all day.
And it's also a great signal to your up and coming leaders that you care about them and you care about their personal development, right? I think that's a lot of times people just assume that everybody around them sees what they see. And they do eventually, but also investing in them personally, even at the stage you guys are at, which is how many employees are at Fairmarkit today?
So we had 105.
Wow. And what were you a year ago?
50.
Yeah. Probably be double again.
Yeah, very
next
soon.
Year.
Yeah. Which is like a whole different challenge, which is onboarding, training, same message, but with 1 minute left, we definitely don't have time to dig into all that.
No. It's a whole other topic. What about, since we are, any tips for folks? Because I know one of the things that you just mentioned, you have a new baby, and any tips for founders on balancing work and life and social? Any personal tips you'd share with people? This is unscripted, so I have no idea what you might say, and you weren't prepared for the question, but I'm just curious.
I'd say two things. One is I've always had the mentality, and it's a company motto, win each day. I send an email every day to the company, which is win each day, which means do as much as you can every day. When you get into the seat, just go and just grind all day, be on all day. But then once your day's over, shut it off. And obviously be accountable if something does come up after. But there's always going to be 1,000 action items that like you're not going to get to everything, especially at a fast growth company. So like that's allowed me to say, okay, I can't do everything. I'm going to prioritize what's important, and what I don't get to, I'll pick up the next day and figure out if it's prioritized and important. The other thing that I do is I've really blocked off my calendar, because I do have a new daughter. So from 6 to 8 every morning, I'm with her. And then in the afternoon on certain days, I just block off time to make sure I can hang out with her.
Smart.
Also prioritize work. I love the Peloton. So the Peloton just gets me fired up. So I'm a big Peloton fan, which helps just to make sure I feel fresh.
And do you do it regular? Do you do it every morning, or is there a certain time of day, or you just squeeze it in whenever you can?
I usually do at the end of the day. So right before
Okay.
dinner,
Oh, wow.
just to like, it's the kind of turn my brain off and then just compete against everyone up on the side right there.
Nice. Awesome. I'll have to, Glenn in our firm's a big Peloton rider. I need to get better at it, and my wife is as well. But and obviously we were an investor in the company, so I'm thrilled to hear that.
Yeah,
but,
Steve Sovic is a beast.
Yeah.
If you look him
Oh,
up,
he is. Interesting. Okay.
He's winning like 40,000 person races. So that's
wow. Good for Steve. All right, Kevin, thank you for doing this. I appreciate it. Hope I didn't throw any curveballs at you. We were unscripted, but great to catch up, man. And we couldn't be more thrilled to be investors, as you know. And I think the future is very, very bright for Fairmarkit. So thanks for sharing all this on a personal level with other founders who may get a chance to watch this.
Absolutely. Thanks for having me, Jeff.
All right, man. Take care.
All right. Bye.